everything is going well for you, whatever time it is, and that you're pursuing life, liberty, and happiness, or that you're enjoying life, liberty, and pursuing happiness as best you possibly can. Um, Real quick about the Bitcoin and crypto markets, you'll have noticed there's a lot of crazy FOMO going around in the usual peanut gallery of YouTube Jimmies out there. People on the Twitterverse, people on the YouTube world, people on all the different networks, right? People in the chat rooms of like TradingView and other websites, stock twits and all that other stuff. They're all like, oh, crypto's about to pump to the moon. Crypto's about to go to zero. What did crypto do already today? What did Bitcoin do already today? Right? Went up to 97.7 or so, okay? 97.7 thousand. And then swiftly dropped over the period of 5 hours to 95.8 and dropping further. That's the last I saw of it a couple hours ago, right? So a $2,000 drop almost, $1,900, and actually was $2,000 by the time I left. It was dipping further. And where did it hit? It hit exactly on VRE target levels, right? So was that a surprise, right? It was like up at I think it was like at the first daily sell level, and it dropped down to the first daily buy level, and then kept dropping down from there to like I think 4-hour levels or daily levels of Laplace and normal. Anyway, point is, it was following along very nicely on the VRE charts, on the normal distributions, and on the Laplace distributions, because that's what happens, right? Those things are price magnets. Like I said in the previous video, that's why we use, right, the VRE and the Laplace and the normal distributions, right? It's not by accident. We use those things because they work, right? Why do the high frequency grading firms use them? Because they work. Do you think that the companies that have billions of dollars to trade with in their little trading groups and that manage trillions of dollars in assets, do you think that they mess around with voodoo lagging technical analysis, like lagging price information? Do you think they use that? Or do you think they use calculations based on the returns, right? Look at the guys from Tasty. They'll even tell you it's about the returns, right? Tom, in fact, I saw an interview he did recently. I forget where. He was speaking to somebody, asking him about what it's like to be a day trader and his career and all that. And the person asked him, like, so for you, is it all about the, is it about the returns, or is it something else? He said, no, it's about the returns. Hello, I see you. Hello, good to see you. So even he knows, right? Especially he knows. He's been doing this for 40 years, right? So he knows Black-Scholes. He doesn't use the historical context of the volatility in the sense of the historical volatility percentile. He should, because together with implied volatility, you get very powerful information, right? But yeah, they don't. But anyway, the point, I mean, he's an options trader, so whatever, different story. He does it differently, even though he could use the same tools. But the point is, even Tom knows it's all about the returns. It's not about the price, right? It's about the returns. So keep that in mind, right? There's a reason that volatile assets are called volatile assets. Anyway, keep that in mind, and happy trading. See you guys.